All right, team, we are here with the man, the myth, the legend, Michael Steuer. Matt, do you want to give him an intro?
If you guys haven't seen any info before from us regarding Casper or seen our previous two interviews with Steuer, I would highly recommend go watching those because it's going to give us a really good overview of Casper 101. That's not what today is about. We're talking about what the growth we've seen on the network, talking about the ecosystem developments. But Michael's a very experienced person in the space. He actually co-founded Casper Labs, which now he is CTO at Casper Association, the nonprofit. He's been in the DLT space for over a decade. And it's been a pleasure both times to kind of get a little bit of your knowledge base and understand a bit about what's going on with the ecosystem. Like Gavin said, we have some nice changes that have occurred and some meaningful, measurable changes to the network in the recent months here. And there's obviously going to be three components to that, at least as far as the top level. That's going to be obviously the change in block time, the fees structure, so burning of fees, and then also the a little bit of a change in the compensation structure for validators. But I want to start with block time. Obviously, this is a good thing no matter how you slice it up. Being able to execute more blocks in a smaller amount of time. Talk to us a little bit about how we've actually been able to implement that. Has there been any changes in security or the verifiability with this lesser block time, and what are maybe some trade-offs that we're getting in network or validator activity with this shorter block time?
Sure. Well, first of all, very nice to be back here. Can't believe it's been, I think, almost a year since we last did this. Happy New Year to both of you and to all your viewers.
Cheers.
So block time, we went from 16-second blocks to 8-second blocks, which effectively means an average sort of time to completion or to finalization of 4 seconds, right? Because if you submit your transaction right at the beginning of a block, it will take 8 seconds. If it's right at the end, it's 0. So depending on when you submit it, the average is 4. What it really means, since we have instant finality on Casper, is that after an average of 4 seconds, your transaction is completely final and irreversible, which is pretty fast compared to a lot of other blockchains out there. If you have to take the fact that they're not instantly final into account, right? Like that probabilistic finality, meaning you have to wait a certain number of blocks before you can be relatively certain that you're irreversible. Then to your question as to trade-offs, there really weren't any. Basically, what we've seen, and this was always the plan when we launched Casper 2.0, was to go out with a conservative setup, let it run in mainnet for a while, and then sort of like we said at the time, take the training wheels off. And we did a lot of testing in order to determine what sort of the safe next step would be. And going from 16 to 8 was completely safe and fine. We tested as fast as I think like sub 1 second blocks, but we would just want to go step by step and see how things perform in mainnet. Things are performing wonderfully. There's zero concerns, so we'll continue down that trend. And there are no security or other sort of drawbacks to this. Given the instant finality, things are still instantly final at the end of a block. And this is purely sort of a configuration in the chain spec of the network. So once that was adopted by the validators, it went live, and that's it.
I think that's a beautiful perspective. I like what you said about taking the training wheels off, and a lot of people get frustrated with the speed of progress, in technology development, whatever it is, because, they want it now, they want it to be done, they want it, to have the highest TPS number for advertisement purposes. But it is more important that we make sure that we're, when we do scale, where we're getting more aggressive with the way that we're tuning our protocol, that we're doing so in a safe and sustainable way, and we're not taking a good product and breaking it by just trying to be too aggressive with, a higher TPS that sacrifices those things. So I'm glad we were able to do that without, bringing additional risk or security risks. Other big changes that we just mentioned.
I would also just argue that TPS is one stat, but the more interesting stat is time to finality.
Yes.
Right, and that's one where even with a 4 second block time, given our instant finality, we're highly competitive.
That is a great point as well, because like you said, some other protocols, yes, like maybe the block time or TPS is there, but when you truly have that irreversible finality, it bird in the hand, no question about it, that is a very different sense of peace. So it's probably even a more important metric that we pay attention to than just TPS, although it's just like horsepower, the most advertised number that everyone gravitates towards.
It's extremely important in the case of like real world transactions, right? If you're talking about the RWAs or anything like that, with probabilistic consensus, which you have have on networks like Ethereum, where, like, as you know, when you send something to an exchange, they tell you, well, we received your transfer, but now you got to wait for 64 block confirmations before we let you trade it because we're not sure if it gets reversed or not. That doesn't work. I mean, that works for you and me as sort of crypto degens, right? But it doesn't work when BlackRock is selling $1 billion sort of real estate portfolio. They don't want to know whether or not the ownership gets reverted, right? Like, it's not in the real world. You don't have it's owned by the seller, it's owned by the buyer, or it's owned by who knows, right? Like, this sort of whole limbo situation in the middle doesn't exist. So instant finality is very important out there in sort of real business terms.
Absolutely agree. Like, even in real estate, it's logically, people who are just wanting to get in the house, well, what does it matter if we get the keys 30 minutes early? Well, we need that finality. We need the recording to say that you own the property, because that liability still sits, until you have that true finality in that final recording. So there's a lot of real world applications that make sense too. Other big part of the upgrades is about fees, and basically tweaks to the tokenomics of Casper a bit. In my opinion, all good things. Obviously, one is going to be that, there's an 8% inflation rate. That's not changing. That is the way that it is. Obviously, we have staking rewards. Those are dynamic and, are based on participation rate and other things. We're going to be now burning some of those fees, or burning all the fees, excuse me, but then also changing validators, compensation structure requiring minimum, validator fee to incentivize validators. Can you talk a little bit about that and kind of like how you think that'll impact the health and tokenomics of the project moving forward?
These are examples just of really like community governance in practice, right? Like, these were initiatives that were started by the community. They were put up for discussion first in our governance forum. A final proposal was put up and voted on and then implemented. So with the burning of the fees, the validators, on behalf of their delegators, their stakers, right, said, like, we want to see these fees burned and sort of make sort of first steps into sort of improving the tokenomics or making it deflationary. That was voted on, and I think within weeks that went live in Casper 2.1. Same thing with validator requirements. I believe you're referring to like the minimum fee, right?
That's right. Yes, correct.
So I think amongst the validators, there was always this feeling that, like, there's a lot of people or a lot of validators putting out like 0% fees in order to attract a lot of stakers. And it's not like obviously long-term sustainable to do that. Doesn't reflect sort of the real business of the cost of running a validator. So perhaps we should set some sort of minimum, and the validators, I don't recall exactly what percentage that was, but it was like 2 or 3% fee or something like that. And that way, basically, they as a group and sort of majority rules in proof of stake, right? Like, decided that, like, from now on, like, if you want to be a validator on a network, your fee is going to be 2% or higher, because running a validator has an actual cost, right? You got to have a server and bandwidth and hosting and all that. And there should be some minimum in order to have this reflect real business conditions.
I think that makes a lot of sense, and we've had a conversation recently on our show in the past few weeks about Algorand, and with their original tokenomic investing schedule that's kind of coming to an end. We now have a proposal on how that looks moving forward. So I think it's important that people notice that these tweaks in tokenomics, especially in decentralized protocols, are going to be kind of like a rolling improvement and things we have to consider. And the early we consider those things and kind of examine the existing health and what could provide more long-term sustainability, it's good to have those conversations early and often to make sure that we're on the right page.
Speaking of validators and all that, and I know the purpose of this conversation is for you guys to put me on the spot, but I'm going to put you on the spot a little bit, because don't choke.
Literally choking right now.
Yeah, you know what's coming probably. So in a previous conversation, you said you were going to set up a validator and run your own. What happens?
Honestly, I have just not put the time and set the time aside to even get with one of your generously offered resources to help me get it set up. But you know what? New year, new me. I think it's time in 2026 we launch the crypto charge validator node and charge as little as possible, just to encourage ecosystem growth and people to earn some rewards without giving away all their incentives.
Love it. Well, the offer still stands, so I'll connect you with someone to
I
help
appreciate it. And you know what? You guys, let you guys know that Steuer does not let it go. He remembers. He's an elephant, never forgets.
There you go.
I know Gavin's going to rotate to some really cool RWA related topics, and I really want to hear a lot about your take on some of these questions. But before we do that, hackathons are something that people have been doing in a variety of different protocols. I think a lot of people maybe see the post, but like maybe it's too technical and they don't really understand what a hackathon is. So what is a hackathon? Casper's been running one right now. What does that look like? And then maybe what are a couple standouts? You're like, okay, we got some really incredible ideas or good products that could make great long-term applications on the network.
Yeah. So what's a hackathon? Well, hackathon is really a sort of development or coding competition, right? Like even though it has hacking in the name, we're not necessarily encouraging. There's no bad actors in this, right? Like it's really just coding. And we organized a hackathon, a competition where we offered some prizes and partnered with a network called Dora Hacks, which is a global community of like 250,000 or so developers worldwide. Put out sort of a framework of what we were looking for. We have a number of tracks, sort of general track, and then some things that are specific around DeFi and liquid staking and real world assets and things like that. And basically opened it up to the world of developers to participate in. This started, I believe, in November. It officially ended today. And we're going into it sort of a 2-round process. We have sort of open submissions during this first round. There were certain requirements for people to qualify for the final voting round, which is having a live product, having an open GitHub repository, having provable on-chain activity and things like that. And the projects that qualify will now move on to the next round. What's interesting is that we made this very much sort of community oriented by having the community participate in voting on sort of the projects that they want to see in that final round through an on-chain vote. So you guys may have been familiar with the CSPR.fans app that we previously launched, which is sort of a community engagement tool. We repurposed that in order for our community to really review and look at all these projects and then use fan tokens to vote on all these projects. So there's been a lot of engagement around that. But what really blew us away really was the level of participation in the hackathon itself. So we were going into this sort of expecting, well, maybe we'll see like a dozen or a couple dozen sort of projects come out of this. Now that we're at the finish line of this first round, we have 120 or so viable projects that came out of this in the course of 2 months. And that extends from people building like full bridges and DEXs and liquid staking protocols and over collateralized stable coins and lending and essentially like you name it, it's in there. And it's just phenomenal. It's really beyond our wildest dreams from an outcome perspective, and it really reinforces what we've said all along, which is that Casper is a very accessible and easy platform to build on, and we provide a lot of tooling and developer tooling and accessibility that makes it exceedingly easy to sort of build products on. And it's nice to sort of see that being proven out there in the market by basically said, well, 2 months ago, we said, look, here we are, here's Casper, here are all the tools, and now go build. And here we are 2 months later, and we have 120 projects that we have to work through in the next week in order to judge them and decide who goes on to the next round. But phenomenal outcome.
Nice. Michael, I want to get into some of the more bigger conversations that might be more palatable for our audience here. And you're the face of Casper. When you go on X, you're going to see Michael Steuer. And I want to ask some of the bigger questions to you. And one of them would be like, 4 aspects I'm seeing to every popular ecosystem in 2026 is tackling institutional use cases, real world asset tokenization, stable coins, also the open financial systems with borrowing, lending, and yield, privacy on mainnet, interoperability with other ecosystems. Which one of these could you see Casper, or maybe even all of them, I don't want to limit you, could you see Casper really able to be, taking a hold of over the next couple of years here? Because I understand with a smaller ecosystem that is Casper, things take time.
Well, there's a lot to unpack there. But let's get started. So definitely, I think institutional use cases are where things are heading, and that's something that we've been saying all along, which is real business, real world use cases, right? Where institutions obviously play a role. I think when you look at what we've done over the last year, a lot of that is focused on that, specifically our parking industry use case, which we haven't had the chance to talk about because I think that was after the last time we had an opportunity to speak. But that's actually sort of checks off a lot of the boxes that you mentioned. So I'll summarize that real quickly. In May, we announced a partnership with one of the largest sort of players in the US parking industry, which is and I learned a lot about parking that I didn't know probably a year ago. I don't think many people know much about this industry, but it's $140+ billion a year industry just in the United States alone, right? So globally, I don't know what the number is, but it's obviously even more than that. The interesting thing is, or actually, I guess the boring thing, which makes it interesting, is that it hasn't really been, it's been operating the same way for the past 100 years since there are cars, essentially, right? So it sort of skipped a lot of innovation. It hasn't been much disruption, but there's a lot of opportunity to disrupt and innovate. So, the way it works, and you'll get a quick parking industry 101 here, is you have parking lot owners, right? Like landowners, essentially, who work with parking operators who run businesses for them, that work with resellers and platforms that optimize their pricing based on supply and demand, who work with aggregate. I mean, there's a whole sort of value chain of users in that, not users, but value chain of stakeholders in that ecosystem that all take a piece of the pie. Ultimately, the party that also takes a piece of the pie is the city or the airport authority that a parking lot is located in, right? Because they have to license them to do that. Because you have these official jurisdictions taking pieces of the pie, they want to make sure that they get the amount of taxes and fees that they're owed. So they perform very regular audits on these parking operations. Which also feels like it's unnecessary, right? So what we're doing here with the parking industry is actually implementing a lot of innovation with on-chain sort of tooling to tackle three things really, and that's a long way of sort of getting to checking off your boxes there, Gavin. First of all, we're using on-chain technology in order to verify and validate parking transactions, so that you no longer have to do these costly and cumbersome quarterly audits. You're going to have quasi real-time insights into how these parking lots sort of perform, and it's obviously immutable and irreversible and trusted, etc. So that's one thing, right? Secondly, we are, as you might imagine, a industry that moves $140 billion a year between stakeholders. There's a lot of opportunity for improved settlements, which with on-chain and stable coins can result in daily or whatever the case may be, settlement on chain in stablecoin. That'll remove the need for factoring out of the industry, which is an additional like 2 to 3% cost. So there's a sort of business reason for these parties to want to do that. And then lastly, and that's perhaps the biggest opportunity, these assets are extremely interesting from a tokenization perspective, because you have real world assets that are underpinned by real estate, right? Like a parking lot always exists in the real world. It has a value. It appreciates over time, because that's the general sort of rule with real estate, right? Like you take a long-term view, the line only goes in one direction. Right. And they have really predictable yields. If you're a parking lot owner on an airport, you can probably map out your next 10 years, and it's going to be pretty accurate. So, as a real world asset, you have something that has a sort of built-in value, appreciating value, and then a predictable yield on top. It's a lot more interesting. Well, the other thing that makes it more interesting actually is that these parking lot owners don't really have access to liquid markets, to capital markets, right? They generally go through financing and refinancing all the time, and the only place that they can go for that is like whatever their bank is, right? And conversely, us as investors, we don't have access to these highly attractive assets with real estate under it and predictable yields, because there is no market for that, right? So unlike T-bills, which obviously are very liquid, don't have any problem finding investors, and investors don't have any problems finding them. This is actually an opportunity where tokenization sort of improves things both for the asset holder, for the issuer, as well as for the investor. As an asset issuer, you gain enormous access to capital markets that didn't exist before, and we as investors can now actually participate in it.
Very interesting. Last year, we saw a survey done by Coinbase, and that showed that 60% of Fortune 500 companies are looking into or have already started using blockchain initiatives. And within that same survey, it was also done about half of small to medium-sized businesses are looking to use blockchain technology over the next 3 years. If someone wanted to use blockchain, could they use Casper? And when I say someone, I mean a business.
Well, yes. I mean, you got to give me more sort of context than that. But like as we've just seen in this hackathon, for example, like most people who wanted to use Casper were able to and produced valuable products. But if you're asking, like, give me some constraints here. Like, why wouldn't they be able to use Casper as opposed to some other blockchain?
Well, like with other networks and the suites that they're offering, like the XRP Ledger Payment Suite, that's very easy for a company to go in and start using XRP-L payments immediately. Could that be done on Casper?
100%. Like we have a complete sort of coverage from a developer perspective, like with the tooling that you might need. There are some things that we're still improving, like stablecoin availability on our network, which is, I think, a big priority for us in this first quarter of the year. We are solving the interoperability question, which is an interesting one. I think as an industry, I have a bit of a gripe with the interoperability sort of field in our industry, which I'm happy to talk about. Interoperability is definitely key for growth of blockchain and Web3, right? And right now we're seeing a trend of interoperability becoming highly centralized, right? Like there's a few sort of parties that control interoperability, be it Chainlink or parties like that. They exercise centralized control over interoperability between networks, which goes completely against sort of the blockchain decentralization ethos, right? So I think there's a huge opportunity for a protocol to come up with actual open interoperability access, which has been sort of counter to the trend, maybe because there's a huge opportunity in that space, but anyways, we're solving that as well for Casper, and I think those are all the elements that you might need as a business in order to build on top of Casper.
You have anything, Matt?
Yeah, I think that we've talked about a lot of the really important updates. There's a couple of smaller things that I just wanted to kind of get your thoughts on collectively. We've there's mainnet and testnet, and testnet's obviously kind of like the staging environment. We're going to make sure everything's good. We don't want to, load things that are going to break the chain or cause problems on the chain or require rollbacks or freezes. So of course, testnet's very important. I've seen posting a lot recently about Casper.trade as well as Casper.bridge. So maybe talk a little bit about what those features look like and what you're hoping to see out of those features, as they move on to mainnet, and what that means to the ecosystem growth as a whole.
Sure. So Casper.trade is a DEX that was developed by the association in partnership with two other companies, Make and Odra. It's currently being tested on testnet. There's in fact a trading competition going on right now. So if you guys want to participate in that, you still can. And that is expected to go to mainnet, I believe, in a couple of weeks. So like third or fourth week of this month. That'll be sort of the primary DEX that we sort of promote out there, and then pair that with finally the mainnet launch of our liquid staking protocol, right? Because that's been ready and being tested on testnet as well for the last few months. So now we'll have a liquid staked token that you can use on the DEX as well. And then Casper Bridge obviously sort of fits right in there in order to provide accessibility to the ecosystem from the outside, as well as for you to take, for example, your liquid staked Casper and take it to another ecosystem and and do whatever you do there, trade, buy, etc., with a token that yields like 15% APY in the background.
That's absolutely beautiful. I really appreciate you sharing these updates today. I also, I follow lots of different projects, and some of them are larger cap, some of them have been here longer periods of time. Either which way, I really do appreciate the level of care that you guys have put into the consistent updates, the thorough updates on X. I recommend you guys go watch pretty much all the spaces are available on X if you guys want to learn more about Casper. Michael's also on X and puts out a lot of great information as well. Not just being in a leadership position, but somebody who truly does appreciate and understand building on a very technical level. So I'd recommend you guys check out those resources. Gavin, do you have anything else for Michael before we close out today?
Yeah, I had actually like 3 more questions I wanted to get to. Maybe we can go back to the one that we discussed before the show, Michael, because in the last space with Shaftnet on the end of the year 2025 wrap up for Casper, you happen to mention the current crypto market conditions, and that is something we constantly cover over here. We discuss all the time with frequency about how you can see a shift in sentiment within crypto projects with a trajectory in Bitcoin price action and, a lift up in the rest of the altcoins that you could see, generally speaking, within the the total crypto market asset class. And, something I wanted to ask you about is, recently we've been covering another project that had everything going for it. It had a new DAT, it had an increase in its main use case, its main feature being shielded addresses, that, privacy feature. And then we saw this team behind this decentralized network pretty much fall apart towards the end of last year after they announced a new roadmap for the Q1 of this year. And so I wanted to kind of gauge, pre-show with you where you're kind of at with this, because you mentioned something that we talk a lot about. We're covering crypto projects all the time. We're looking at the fundamentals. We're looking at the technicals. With a lift in the crypto market, how do you think Casper would be able to perform? And when I say perform, I'm not talking about price. I'm talking about being able to execute its goals, continued utility, seeking out more partnerships. I know my father this weekend is like, when are we going to get some more tier 1 listings? And so what do you think that could look like with a turnaround in the crypto market for Casper?
So yeah, you touched on something very interesting, because I am completely puzzled at how sort of the crypto market works from a sort of price action perspective, right? So that's why I always take my hat off to Matt with his technical analysis, because he may be completely right, he may be completely wrong. I have really no way of judging that. But what we've seen, or what I've seen, is sort of a complete decoupling of sort of projects fundamentals, and I don't mean technical analysis fundamentals, but what are they building, who are they partnering with, what's going on within the project, and what happens with sort of how the token price is developing right in the market, which is apparently completely sentiment based, and sort of coupled with the broader market versus the specifics of the project. Listen, it's very straightforward. When you have more volume and a higher price, you get more attention out there. We see that with you mentioned tier 1 exchanges. How do exchanges make their money? On trading volume, right? So if you generate more volume, you're an attractive target for an exchange. If you don't, then why bother? So those are it's as simple as that. So I get obviously that question on a daily basis, when do we get more tier 1 listings? There are some that are closer than others, but ultimately, more traction in the market means more volume, means more exchanges. Simple as that.
Yeah, David Schwartz talked about something recently, how institutional adoption is going to prop up a lot of these networks and get retail more interested. And, maybe that is what's necessary. And that's why I was so adamant on institutional adoption. What
Yeah.
about for businesses and small businesses?
Mhm.
Because like you said, like blockchain technology offers something to the real world, and it shouldn't be overlooked. And going forward, we talk about payments, we talk about the tokenization of real world assets, and now with privacy, something we've been covering a lot recently. There's so much this crypto digital sphere offers for a individual, a business, a large business or institution. And so that's what I would like to see come to Casper in 2026. And I know you can't promise anything, there's no guarantees, but we pay close attention to what's going on X with you. I know the community kind of surrounds around you, and you're a very loved individual within the Casper community. And also, I saw something
Not by everybody, but thank you.
I don't know about that. I don't know. I think people glaze you, and we love you because you're just such a great guy. No, you are well loved, Michael. Don't say that. I want to talk about, is there any way for someone to get free Casper right now? I thought I had found somewhere on maybe like the Casper.live, a connection with one of the, the pop-outs on Casper.live in connection with everything in the Casper ecosystem. Is there any way for people that want to get free Casper to do so right now?
So there's always like competitions going on in like the Telegram room, for example. So I know that our community managers like to put out competitions. Like I mentioned, there's this trading competition going on CSPR.trade right now, and I don't know exactly what the prices are, but there's free Casper to be won there. There's not a free Casper faucet, if that's what you're asking. That's not a great business model.
Casper money tree.
Yeah, exactly. But join our Telegram and participate in some of these competitions. I think they're probably also mentioned on our X. Free Casper to be had. And then stake it and earn 15%.
Yeah.
Absolutely. So for me, I've always said, anytime I talk about technicals, which obviously we're discussing strictly fundamentals today, but even when I talk about technicals, from a risk management standpoint, I tell people, if you're not staking and participating in the native staking pool, which doesn't carry inherent risk like lending does, you're leaving a lot of the trade value on the table, which obviously I'm not asking you to advise on, but it is something that I mention all the time as, it's very, very silly to not take advantage of it, because it is, you are contributing to the safety of the network, you're contributing to the POS model. It's a great level of involvement, and you are rewarded for it with very little lockup. 14 hours in, 14 hours out is a very short period of time, especially when you compare it to even like the Ethereum protocol and others. Those can sometimes take days, if sometimes weeks, depending on what the contingencies are. So I appreciate you, Michael. You are sincerely always a wealth of knowledge when you come on. It's always a pleasure to have you. Maybe give us, just to close out here, an elevator pitch to somebody who wants to build, whether it's for their business and they have an online business or an in-person business, logistics. Give us maybe an elevator pitch to developers that might be looking for a new chain to build on, why Casper is a good fit for most people.
So I would say that the pitch is really, you're looking for a network that can meet your needs. And in this case, we talked about some of the unique aspects that we have, right? Like our instant finality, which makes it so that you can sort of match your real world sort of scenarios as well. We haven't talked about this in this session, but you guys are aware of our sort of other real world compliant things like on-chain access management, upgradability of contracts, and things like that. And the real sort of sweetener for the developer is just the ease of development. So I would say go to CSPR.build, which is a website that basically lays out all the tools and documentation that you might need. And there's a bunch of sample projects as well. So you can get started very easily. And literally within minutes, you could be building something that sort of meets sort of your product goals. And the way that we've done that is by basically providing the tools and the examples that take all the sort of Casper or blockchain specific things that you might do as a developer sort of out of your hands if you want that, so that you can focus on really sort of the core functionality of your product rather than having to figure out like, how do I connect a wallet and where do I get my RPC interface from and all those things that you might have to sort of spend weeks on in other ecosystems. We get you started within minutes.
Beautiful. It sounds like we got a lot of plug and play tooling, and I hope that people do start to check it out. Sounds like just from the hackathon alone that the interest and the amount of quality of the interest was really a lot greater than what you guys expected. So
We were blown away. Absolutely.
that absolutely speaks volumes. So again,
Yeah.
guys, none of financial advice ever. We try to give you guys this educational basis. Always go and check out the information for yourself. Check out the white paper. Check out the website. The website has a lot of information for you guys as well, where they talk about the developments in their blog there. You guys have the ability to be fully tapped in and read and verify all this for yourself. So recommend you guys check that out. But Michael, thank you so much for coming on today, and hope to talk again soon after we have another nice slew of updates.
Sounds good. Always happy to be here. Thanks, guys.